Welcome, Patriot Radio News Hour. Joe and Jason on this Thursday. I hope it finds you well out there, man. Let the crazy times continue on. You guys know our number. 800-951-0592. The website at allamericangold.com. And obviously yesterday with Texas, we crossed 15,000 miners. Guys are just starting. Already today, you know what? It wasn't a big change at 15,000. I don't think it should impede anything. We're already over 100 miners signed up again today. Yesterday was a new record, not just for a Wednesday, but total. It's not going to be long. It's not going to be long. I hope you guys get smart and get in. Call us when you're ready. On the gold side of things and the silver side of things, why do you own it? It's simple. It protects what you've already earned because they want to keep printing money, period. Did you see the deficit number for July? Probably not, but that's why you got me. Just missed $300 billion, right? 290, was it 91 or 293 billion, something like that. Let's just round it up, call it 300 billion. They've already said, hey, we already know the first 6 months of next year, 1.6 trillion. Yeah. You know, we still got August and September left for 2025. Today, we got producer prices and jobless claims, and, yeah, not good. Not good at all. It's going, I don't know what this will do for rate cuts. I think they're probably going to have to ignore them, but we'll get into those numbers on the producer price side after this. It was hard to accept. Let's just put it that way. Hard to accept that they were so high. Normally, when you see producer prices rise, what do? They pass the cost on. So does that mean the CPI next time is going to be really hot? I don't know. Right? Remember this time, the headline number wasn't bad. It was all the other numbers that were bad. And then we got jobless claims. And those just stayed right there. I think it was 227 last week, 224,000 people filing for unemployment claims for the very first time this week. And again, they want to see more, right? If they could have got a number 240, 250, right, that would have been beneficial to cutting rates. On top of that, though, the one thing that, I guess if you had, of the data today, there was only really one piece of data that gave credence to cutting rates, and that was continuing claims. Continuing jobless claims continues to push. I mean, it's right on the precipice now of 2 million, and that's kind of like when you get above 2 million, that's not a good thing. That was about it, though. That was the only piece of data that really would allow for what we would consider to be grounds for cutting rates. But we'll have to see what happens as more and more of the Trump nominees are talking about big rate cuts. There was a article out talking about the retail clothing industry. This is, again, I don't know how this isn't showing up somewhere, but the number of people working in the clothing industry continues to decline. They're saying the biggest declines, smaller places. So I don't know, I guess maybe those those little one-offs, those little boutiques that are in the strip malls, possibly, according to the Census Bureau, retail firms in clothing dropped from like 56,000 workers to less than 50,000 workers. The number of establishments down by 20,000 and something like, and just retail in general. Something along the lines of 300,000 less jobs in the retail space since COVID. And a lot of that seeming to be picking up pace this year. So we'll see. Now, we will get retail sales. Do we get it tomorrow? Maybe we get it tomorrow. So that we'll see what that number looks like. But when we get back, how bad was the producer prices? Again, it was hard to believe. That's how high the number was, which I guess is maybe the first sign that we have an issue in the tariffs, right? That producers are saying, hey, our input cost shot way up. And then we're going to take a look at your savings and how to maximize. That's coming up next. 800-951-0592. Joe and Jason here on this Thursday. A quick look in at the markets. The Dow is down on the producer price report today, down about 150. The S&P is down 3. The NASDAQ pretty flat today. The 10-year note, all eyes on the 10-year, back to 428. Remember, on the inflation, the CPI number, yes, remember, it got it all the way down to what, like 4.2, 4.21. Back to 428. Crude oil higher today, probably because it just got too low, $63.50. Right now, gold's down just under $20, $19 right now on gold, and mostly because of the dollar, right? The 10-year note shot back up. Dollar's a little higher today, 3,340. Silver down about 50 cents at $38. But what was the number? How bad was the number on producer prices? Let's just say the headline number up 0.9% month over month. I mean, hard to imagine. They were expecting 0.2. Obviously, if you annualize that, that would put inflation at the producer side at 10.8%. So extremely high. This was the highest number going back till June 2022. The PPI is now up. This was a number down near 2% last month, up to 3.3%. When you look inside the number, it didn't get any better. So remember yesterday on the producer, the headline was good. Then you looked inside, not good. This one just not good everywhere. Core up 0.9% month over month. The year over year up to 3.7, so almost double that 2% number. By the way, it's the biggest jump in the core since March of 2022, right? I mean, we're going back to the early days of the inflation cycle. Final demand, more than 3/4 of the broad-based advanced in July. Final demand services, which rose 1.1%. Wow. mean, wow. That's 13% if you did that every month. Obviously, we don't expect that to be the case. And they're talking about margins. They're talking about the extent of where this occurred. If you stripped out trade, you stripped out transportation and warehousing, it was still up 1%. So final demand for goods increased 40% of that. Gosh, man, just not good. There was really nothing that was good. How about takeout food and energy? Right? Takeout food and energy up 9/10. They said that prices for fresh and dried vegetables up 39%. Oh. Indexes for meat, diesel, jet fuel, non-ferrous scrap, and eggs all rose. Gasoline demand that didn't. So there was, I guess, one positive sign, down 1.8% on gasoline. Airline passenger service up 1%. Portfolio management cost. Be your own central bank. How about that? Up 5.8%. Whoops. Hospital outpatient care up another 0.5%. By the way, that was up 0.9% in June. And I'll just say this. Get ready for much, much, much higher energy prices as that report just came out today. And they're saying that there are going to be surge in energy prices are coming across the United States. According to the U.S. Energy Administration, the average electric bill in 2024 was up from $122 to $144. I mean, it's almost 20%. And this report, electricity prices up 5.5% over last year. And of course, okay, that just means there's another 15% to go. I don't know. Listen, I'm still very confident they're going to have to cut rates. There's just too much debt. The reverse repo facility, you know, we used to talk about that. Remember that one that had $2.5 trillion in it? It's empty. There's the backstop is gone. I don't see any other way for this to go except for lowering rates. And I actually still think we're going to see quantitative easing. I don't know how all the debt is going to get absorbed. It seems like an impossible task for this to be soaked up by the markets, especially when the foreigners aren't coming. There hasn't been a good auction. It's 2 weeks now. There hasn't been a single good auction in 2 weeks. I guess the one thing you could say about this week's auctions versus last week's auctions, I guess they weren't as crappy. Right? You know, it was just less crappy than it was the week before. And as we said, you know, we talk about stable coins as being part of the fix. The Treasury's addressed that. Lots of short term. And really short term, 4-week notes. The stable coins are willing, I guess, to at least do that. So it's going to be interesting. This was not the report that many of us were expecting as far as the inflation side goes. Yesterday, I really think they just want rate cuts, so they pretended that yesterday's report was great. It really wasn't. But this one, there's no pretending here. And the Treasury Secretary, remember, he went on the record. What was it, Tuesday? Or maybe it was, I think it was late Tuesday, could have been early Wednesday morning, wanting 50 basis points to be cut in September, and said that not only should it be cut by 50 basis points in the next meeting, he would like to see the Fed's funds rate at 1.5%. So we've heard Trump say 1%. Well, the Treasury Department, Scott Bessent saying 1.5%. Yeah, that's what we want. Man, how do you do it? Let's look at it. Do you know if you spent your whole life saving and you get to $500,000? Do you know that puts you in the top 10%? 500 grand, which, let's face it, it's a lot of money, but it's not a lot of money. 500 grand 25 years ago, you could have bought 4 entry-level homes. Could have. 4. About 130 grand. How do I know? Because my wife and I bought one. $135,000. Yep, $135,000. Almost 4 entry-level homes. Now, that 500 grand, as long as you live in the right area, right, you get one. And maybe some change, right? Because technically they're saying the median price is something like $434,000, right? That's what they've done. That's just 25 years. But let's look at it another way. Let's just say, hey, I'm going to live off of that 500 grand. And let's throw a number out. How about 8%? Which I think is going to be really hard to get 8% over the next 10 years, every year. But let's use 8%. Let's just say that was it, because that's a pretty good return, right? Oh, I think all of you would be like, dude, I'd take 8%. I'm being overly optimistic for everybody. That gets you about $40,000. Okay, you throw in your Social Security on top of that, right? Okay, right? Hey, I got 65,000. Do you know when we look at Texas as an example, one share, they want one share to get you, on average, between $4 and $5. Let's split it. Let's call it $4.50. So if you bought a 1-pack and you got that $4.50, you spent $9.95, right, for it. You got $4.50 a day. You would end up with $1,642.50, right? So almost double your money. Pretty good. How about if you did a 9-pack today? Okay, so a 9-pack. Now think about this. This $500,000. You saved it over your whole lifetime, right? Your whole lifetime just to get to it. A 9-pack today is $8,955. So let's call it $9 grand. You get the equivalent of 11 1-packs in that 9, right? So you get 11 $4.50, right, for the 9-pack. And let's just say you did nothing, right? I don't do anything, blah, 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 nothing. $18,067.50 for the year. Almost half of the $40,000 you saved your whole life for. And that's just saying, hey, I didn't do anything. I didn't get any bonuses. I didn't sign anybody up. No one got put on nothing. How about the 27 pack? Right? That means you got your 3 pay centers and you maxed all 3 centers. Now, right now, if you do that, you get 11 plus 11 plus 11, right? 1100 hash, 1100 hash, 1100 hash at all 3 of your centers. But Jason and I know how to place it to where you actually will get 1100 and 1100 and the main center ends up with 1700. Yeah. 800-951-0592. Losses on Wall Street picking up here. The PPI, 300% higher than expected today. Nobody knows what to do right now. Really quickly, you want an opportunity? This is not on the website. I've got 20 $10 gold pieces. I don't have 22. I don't have 25. I got 20. Spot. Right now, gold's 33.40. And actually a little bit below spot because it's 33.40 and 30 cents. 1670. 1670 on the 20 $10 gold pieces I have. I've got 10 $20 gold pieces. Also at spot at $30,340 at 800-951-0592. Now, of course, gold lately, right? Gold's been doing better than 8%. But even gold, take gold over the last 50 years, done really well, right? But the example we're laying out today, we work our whole life. Maybe for a lot of us, husband and wife work their whole life. Try to get $500,000, which, by the way, would put you in the top 10% of the entire country. To have $500,000 put away when you retire. It's how hard it is to do. I'm talking about comparing it to Texit. If you took $8,900, and remember, this does not put into effect $100 or $1,000. Okay, I'm setting that aside. Okay, this path to $16, right? Their math is based on, hey, sometimes you're earning a little less. It's between $4, but sometimes you're a little less than $4. Sometimes you're earning a little more than $5. Just, when the prices jump and all that stuff. But about $4.50 every day. A 9-pack would generate $18,067.50. And again, no bonuses, no nothing. You bought it, you forgot it, and never touched it again. What about this 27-pack? Right, now that's 3 9-packs. It's $26,865. Okay. You would actually end up with 3,900 hash between your 3 pay centers. Or 39,100 hash, right? 39 times $4.50 times 365 days would be $64,057.50. Are you kidding me? Are you kidding me? By the way, right? So would you rather sit there and get 40,000 on your 500, or would you rather get 64,000 on your 26,000 and change? You decide. That's your choice. By the way, if it goes to $100, just $100, the math changes. Because now you're going to get $10 a day for the 39. And then all of a sudden you're like, wait, what? Yeah. How about 142,000? That's the type of potential. I mean, and of course, let's face it, if it goes to 1,000, you're a millionaire. And guess what? That's every year, as long as the price stays there, right? And now, granted, there's going to be halving events in the future and whatnot, but normally when you have a halving event, the price of the coin doubles. So, Jason, this is kind of a no-brainer, right? And think about this. Take the one pack, which I told you, you about double your money. Right? All the other packs you do, but you about double your money. $1,600, you turn $995 and the $1,642.50. But at $10, I'm sorry, at $100, that math changes. Because now you're going to get $10, you're going to get $3,650 a year. Every year. You know, and this is the potential. Yes. Is there risk? Yep, there is. Does the risk minimize as we do what we say that we're going to do? It sure does. And this is something where yesterday I was made privy to some things that I can't say out loud yet because they're not finished. But let's just say I already know what the plan from 16 to 100 is and 16 to 1,000 is. And the 16 to 100, they feel like they just got to dot a few I's and cross a few T's, that they feel like it's almost already, it's not done. Anything could happen. But I just wanted to lay this out for you. You busted for your whole life to get this $500,000. And if you don't want to dip into it, right? When that's what they tell you in retirement. Hey, you got to live off that interest. I got to say this right now. I gave you 8. What if the interest is none? What if it's 4%? Listen, Trump's already said, now Scott Bassett just come out. I want the 10-year note at 1.5. Well, what does that mean? Well, can't buy bonds and make any money. Can't buy bonds and make 8%. Can't leave it in the bank. Can't put it in the money market. That means I got to be all out there in the stock market to try to get it. And it's already overvalued. I don't know. It's up to you guys. Listen, we've already had 200 people over the 15,000. The 15,000 thing. Yeah, it was cool and all. No effect. Get in. This thing's the rocket ship. We've got not one, but 3 major additions to the mine coming up. The first one starts, it's going to be in place, in 4 days? So, we'll be back. 800-951-0592, Patriot Radio News Hour. Just to give you an idea, and this is at the $4.50, so nothing exorbitant here on Texas. You need about 2,500 hash. 2,500 hash. And if you have multiple centers, add them up. That to get to over $41,000 a year, man, that's out of sight. How many of you have already got that? It's crazy. And then everything above that, just keep adding to it. To sign up, 800-951-0592. Again, the promos right now. Buy 5 shares at $9.95 a share. Get 1 free. Buy 9 shares, get 2 free. Remember, what's the minimum? 1 share, $995. For those of you that already got in earlier, but you want to upgrade to a 9, not only will they allow you to do so, they will give you the 2 other pay centers. Yeah. A lot of people have been doing that. And they'll put them right under you. Why is that important? Because it doesn't go to the bottom. And remember, points roll up. So those are the things that are happening right now. By the way, that deal on those 9, upgrade to the 9 pack, ends at the end of the month. I don't know about the buy 1, buy 5, get 1, and the buy 9, get 2. I don't have an answer as to when that is ending, but Bobby said it will end. He just hasn't put a date on it yet. Right now, losses on Wall Street starting to pile up a little bit here, down about 200 points. The S&P's down about 15. The NASDAQ now down 50. Gold's only down 15, 33.42. I've got $10 liberties. I don't know how many I have left. I only had 20. They are now below spot by $2. 1670. So if you bought 2, that'd be 33.40. Right now, gold 33.42. And then I had 10 $20 pieces at 33.40. So also below spot at 800-951-0592. And Jason, with the huge inflation number this morning, the odds of a policy mistake now, you got to start considering it. Will they cut rates into this higher inflation, which in theory should make what? Cutting rates should actually add some inflation, right? That's the whole point, right? They want to pull sales forward, right? Cutting rates, maybe you could now, not the ones that bought the homes at 0, but you know the ones. All of you that have bought a home in the last 2 years, maybe you can refi, end up with a few extra dollars, right? What are you going to do with those few extra? Spend it, right? Maybe it facilitates people buying some houses again. Maybe you'll buy a car again, right? These things that Jason usually mean, hey, I'm going to buy a little more stuff, which usually means it puts a little inflation into the economy, which is what they want to do, right? Remember, they want to grow out of it. Could we really set stagflation up with rate cuts here?
Yes. And I think we're in a long-term rate hiking cycle over the long term. Maybe we're going to bring them back right now, but we had that after World War II. The rates just went up and up and up and up and up. And then by the late 70s, early 80s, crescendo, 20% mortgages on your home, right? High 15, 16% mortgages on the home, higher rates. And it doesn't go straight up, just like when after 1980, early 80s, let's just say 84 to 2024, 2020, whatever, we had about 40 years of rate cycling down. Once again, this is a controlled entity. This is a controlled market. And so, Joe, you're right. We're going to have inflation. Well, we're going to continue to have inflation a little bit more and more as time goes on, and we'll up the rates because, it's inflation. It's horrible. They're going to start conditioning the American and citizens across the world to have these inflationary cycles of heartache, right? And then they'll raise the rates, and we'll get the inflation under control. And this is going to keep happening as rates go a little higher, a little higher, a little higher. This is why the treasuries are taking so much stress. Yeah. We're just coming out at 0%. Right. We're not going to have 0% anymore. So if Trump, the so-called storyline you see on TV, Trump demands the new Fed chief to bring the rates down. Let's say he gets it down to 2.5. Then that'll be the new floor. Then we'll have to hike him up to what? 7, 8, 9 for the next inflationary explosion.
Usually you got to go higher.
Yep.
Than the last high.
And then you can go lower, but it won't be down to 2.5% because you can't go lower there because, inflation to the moon, right?
It's going to be interesting. I don't know, right? Did I believe yesterday's number, the headline anyway? No. Do I believe this one? No. Do I believe the jobs number? No. But this is something where the chances for mistakes, and it doesn't have to be a big one. See, when you had the repo facility, the Fed could make a mistake, and the banks just had plenty of money to soak it up. Right, $2.5 trillion at one point. There's nothing in it now. I mean, it's basically empty. Doesn't even. Maybe it's got $50 billion. That's like a rounding. They got a rounding error in the account. There's no net here. Yeah. Gold, $20 and $10 gold pieces at spot, and text it. Those are going to be the winners. 800-951-0592. Final segment coming up. 800-951-0592. Final segment on this, what is it, Thursday? God, whew. Man, yeah, where does the time go? On this Thursday, the Dow down 160 right now. Gold's down $14 now. $10 Liberties. Why am I doing the $10 first? Because I think that's one you should buy first. If they're going to be the same price, might as well have 2 half-ounce versus 1 1-ounce. But however you want to do it. $3 below spot now. Well, $1.50 on the 10s. You got to buy 2 to get the $3 below. 16.70. And then I had 10.20s. Those are at 33.40 at 800-951-0592. The big story of the day is the 10-year note's just not stopping here. Back to 430 now on the 10-year note. The producer price index, just a massive number, 0.9%. That was not year over year. That was month over month. The core up 0.9%, month over. Pretty much everything was up 0.9 month over month. The year over year numbers all well into the threes. The core, I think, was 3.7, way above. They were expecting 3.10, so triple what they were expecting. Kind of puts everybody back into what's going to happen next year. The question's going to be, here's what the producers are saying. Okay, here's kind of the effect on tariffs. This is it now. We're kind of settling in here. How much of it do they pass to you? That we don't know. Do they eat it all? Which, if they do, how many stocks are going to be, they're already overpriced, but, obviously, if they don't pass it along, their margins go down. Right? I mean, pretty simple, right? Makes them less valuable. If they do pass them along, which is probably what's, and again, are they going to pass it all along? Some will, right? The ones that have no margins already will. Those that have some, they're not going to pass it all along. But even if it's half, they're going to pass along 4.5%. Right? This is kind of, I think, what's got everybody scratching their heads today. We'll have to wait to see. We're in that situation, and Jason and I have talked about this. There is no good choice here. And this is the problem. Look at, we're sitting here. There's no good choice. I mean, technically, we should be talking about raising rates. Can't do that. right? Can't raise rates. Well, gosh, we really need to lower them. We do, but, well, we shouldn't, but we have to. You almost have to. Because refinancing all this, and remember all the debt we're going to pile on. If we don't lower the rates, the interest is going to kill us. Yeah. The no good choices. That's when you got to find the alternatives. That's where gold comes in. That's where silver comes in. That's where Texas comes in. 800-951-0592. Gold protects what you've earned over your lifetime. Text it. You can earn more than what you earned in your lifetime in a short period of time.